Good morning, traders and investors. It's Monday, July 14th. Hopefully everyone had an awesome weekend. Looking at the charts, equities are trading slightly lower today. I think we're going to have some fear creeping into the market. The VIX is up about 6% this morning, so there's a little bit of fear. On Friday, when we look at our 30-minute chart, we had a close around the 3 level on our panic selling indicator, telling us that people are getting a little nervous. They're dumping shares into the close. Looks like that little bit of fear is carrying over to today, which actually I think is a bullish sign. We want that fear over the weekend to kind of brew and build within people. The market opens lower and then rallies higher. Now, overall, we definitely are seeing the market struggle for a couple reasons. If we're up at this on the daily chart here, we do have a couple levels here in terms of just this most recent rally up and this little pullback down here. Using Fibonacci extension, you can see we have both we got the 100% measured move just based on this rally and this bull flag. We've hit that level. So that's definitely a level of resistance and why the market is struggling. If we actually look at the S&P 500 on the 30-minute chart here, you can see each time we get up to these highs, they're hit with some selling. It gapped higher, got hit with more selling. It gapped higher, got hit with more selling. It clawed its way up and then got hammered with some more selling. So it's up in a resistance area, well, simply because Fibonacci is up at that level. This is an area just it runs out of steam. There's going to be profit taking and just shares churning. Some investors are going to want out. Others are going to pick up the shares at this level. Until that's done, it's going to continue to consolidate. It's the same with the NASDAQ. If we look at the QQQ, it's actually a little more prominent. Market gets up here, market creates a gap, created a big wave of buying, but more or less it keeps getting hammered. Every time it gets up here, we have some distribution selling hitting the markets, driving it down, and we're just in a profit-taking zone. The market has kind of run out of steam there. Now, if we go back to the S&P 500 and we look at the larger picture here, let's just zoom in on this larger pattern where we have the run up, we have this pullback, and I draw a line down at these lows. I'll get rid of this other Fibonacci. So not only was it 100% based on this short-term move, if we look at the longer-term move where the market got traction, had a big move up, pulled back, it traded sideways for a couple of weeks, and then eventually started to break higher, we are at that the 618 level. As we know, when the 618 level is hit and there's a pause or pullback at that level, we tend to see the market want to run up to the 100% measured move. So there is potential here for this market to continue to push higher, which is what we want at this point. We are long the markets, so why not let it run up and embrace the rally? And that's what we're kind of waiting for this week, is hopefully the market to unwind to the upside, see another wave of shorts who are betting on falling pricing, get caught on the wrong side, push higher, and also suck in a lot more traders and investors who are literally buying on FOMO. We did break to new all-time highs. When we look at the S&P 500, we broke to new all-time highs. We have shorts covering. We have people chasing the markets higher. When we look at our hot list of the top performing sectors, it is the ARK, two of the ARK ETFs and PBW. They were like the biggest leaders back in the day. Same with blockchain, actually. If we were to just go way back in time and look at the type of move, we saw a massive move in the ARK ETFs, 300%. PBW, I feel like the PBW was even bigger than that. From the low to the high, almost 500%. Blockchain, let's just take a look at what blockchain did. Blockchain rallied. Again, all massive moves. And what we're seeing right now are those are leading the way higher. These are the aggressive stocks. So people with FOMO are piling in, trying to take advantage of fast-moving stocks to make up some lost ground and also to make a lot of money. And that FOMO and that greed is usually what catches a lot of people offside. What is up the biggest is also generally going to be the ones that get hit the hardest and pull back. So we're definitely seeing that happen through here right now in the markets, and a little bit of fear from yesterday carrying over, and we'll see how the markets recover and if they are going to consolidate more and potentially pull back a little bit to maybe the 20-day, or is it going to find traction, hook up, and keep this high momentum move and really shoot higher? It doesn't really matter. We're just let the market do what it's going to do. Now, we are seeing money rotate out of bonds a little bit this morning, only down about 1/3%, but we talked about this bearish pattern, a series of lower highs, lower lows, and it is continuing to move its way down. And, we're seeing I think we're seeing problems with tariffs and inflation here to stay for a while or continue to go up. And bonds are going down. We are seeing the 10-year and the 30-year yields are moving up. They're pushing higher. Now, overall, the long-term picture here for the 10-year, this is a massive bull flag pattern pointing to higher pricing. Obviously, that will definitely hurt the United States and all the debt, but it is pointing to like 8% interest rates. If we take a look at the 30-year, it is kind of consolidating, kind of grinding its way higher. Again, this is long-term, telling us that inflation is probably here to stay for a while. And if we take a look at the 5-year yield, you can see it is also in a large bull flag pattern. So the big question with interest rates, and all this is tied, all the markets are tied together. Whenever one asset moves in one direction, moves down or up, that money is flowing in or out of different assets. And really this market, when it comes to interest rates or yields here, they're all in more or less a large bull flag pattern, or it is a stage 3 topping pattern, and then yields are going to crash and come back down, which it's going to be very interesting to see what unfolds, but the charts are pointing to higher pricing. You could argue potentially, if you look at the green 150-day moving average, it is really trading sideways, prices chopping through it. So this is either a launch pad to go higher, or it is a topping phase. The 10-year I like to look at more, but again, it is more or less kind of showing volatility and prices chopping through it. And a lot is going to, I think, unfold over the next year or two that a lot of people don't think is going to happen. And that's why we need a game plan to follow price. None of us know what's going to happen. The key is who can follow price the closest and manage risk and positions. And that's kind of where we're at. Now,